Trend Synth, where AI meets insight.
You know, every once in a while, a new product comes along that doesn't just do well, it completely rewrites the rules. Today, we are talking about a financial product that launched with so much force, it left Wall Street analysts totally speechless, scrambling for comparisons. This isn't just another success story. It's the story of a history-making, record-shattering event. I mean, seriously, comparing a financial product to Tiger Woods in his prime, that is not your typical market chatter. This quote from a Bloomberg analyst really tells you everything you need to know. We are not talking about normal here. This was a once-in-a-generation event that just blew everyone away. And here it is, the number at the very heart of this story, $10 billion. That's how much money BlackRock's new Bitcoin ETF, called IBIT, pulled in. But it's not just the amount that's absolutely staggering, it's the speed, the sheer speed at which it happened. Okay, get this. The previous record for an ETS to hit that $10 billion mark was 647 days. That's almost 2 years. IBIT did it in just 49 days. 49. This wasn't just breaking a record. This was an absolute demolition of the old one. It wasn't even close. So that brings us to the big question, right? How on earth did this happen? What forces came together to create this kind of perfect storm of investor demand? Well, that's exactly what we're going to break down right now. To really get a sense of the scale here, we've got to look beyond just that one headline number. We need to see just how completely IBIT dominated the entire market from the second it went live. Just try to wrap your head around this for a second. This one fund, this single fund, took in 18% of all the money flowing into BlackRock's 1,000-plus ETFs worldwide. It instantly became the number 2 ETF in the entire US for new money. And the number of institutional holders, a brand new fund is lucky, really lucky, if it gets maybe 5. IBIT got 260. It was just an unprecedented total knockout victory. So what was this revolutionary product? What was the engine driving these unbelievable numbers? Well, this brings us to something called the Spot Bitcoin ETF, a brand new, incredibly powerful on-ramp into the world of digital assets. Think of a Spot Bitcoin ETF as a bridge. A really important bridge. It connects the highly regulated, very familiar world of traditional finance, stocks and bonds, with the new, and let's be honest, often complicated world of cryptocurrency. It lets you invest in Bitcoin the exact same way you'd buy a share of Apple, all without ever needing a crypto wallet. And here's why that bridge is such a game changer. Buying Bitcoin directly, it can be a hassle. You're dealing with crypto exchanges, worrying about digital wallets, private keys, security, not to mention the confusing tax reporting. The ETF just solves all of that. It strips away all the technical headaches and the security worries, making it easy for a much, much wider audience to get involved. So, when you boil it all down, the value proposition was just undeniable. First, simplicity. You buy it through your normal brokerage account, no fuss. Second, it's regulated. It plugs right into the financial systems we all trust. It's accessible in retirement accounts like IRAs and 401ks. And the kicker? Because all these companies were competing so fiercely at launch, the fees got driven down to practically zero. It was a no-brainer for big institutions. But look, this was not some kind of overnight success story that was bound to happen. In fact, it was a massive bet from a company that was once one of crypto's biggest doubters. So let's dive into BlackRock's incredible journey from skeptic to champion. This is where they started. Back in 2017, the CEO of BlackRock, Larry Fink, basically dismissed Bitcoin with this now famous quote. And honestly, he wasn't alone. That was the view of almost every major financial institution at the time. Crypto was seen as dangerous, shady, and definitely not ready for the big leagues. So what changed? Well, it wasn't a sudden flip of a switch. It was a slow, gradual evolution driven by their own clients. In 2018, they hired their first head of digital assets to start exploring the tech. They started seeing a slow but steady drumbeat of interest from customers. Then, by 2021, they formed a critical partnership with Coinbase to build out the secure, institutional-grade plumbing they'd need. It was a journey from pure skepticism to quiet study and finally to full-on adoption. Now, the impact here goes way beyond just one company or one product. The arrival of these ETFs is fundamentally reshaping the entire financial landscape and changing Bitcoin's role right in front of our eyes. First off, let's just remember why a Bitcoin ETF is such a massive deal.
As you can see here, Bitcoin is the undisputed king of crypto. It makes up well over half of the entire market's value. It's been around the longest, it has the most trading volume, which makes it the natural and, frankly, the safest entry point for all that institutional money that's typically very risk-averse. And here's one of the most interesting effects we're starting to see, a major change in volatility. Bitcoin is famous for its wild, unpredictable price swings. But as this flood of stable, long-term institutional money pours in through these ETFs, we're seeing its volatility trend down toward record lows. It's a huge signal that the market is maturing, moving away from pure speculation and toward a more stable asset class.
Remember that bridge we talked about? Well, it's now a two-way street. By making Bitcoin so easy for traditional investors to buy, the ETFs are weaving it back into the fabric of the global financial system. Its price is even starting to move more in line with major stock indexes, behaving less like a fringe asset and more like a real component of the broader economy. And all of this, it all leads to a much, much bigger question. As these two worlds, the digital and the traditional, continue to merge and collide, what does that mean for our very idea of what value is? The most popular way people are trying to understand this is through the digital gold analogy. Sometimes you hear it called gold 2.0. The question is Bitcoin about to play the same role in the 21st century that gold played for centuries before, a reliable, decentralized store of value that's outside of any single government's control? The comparison is pretty fascinating when you lay it out. Both have a fixed, finite supply. That's the absolute key to their long-term value. Both are highly decentralized. But Bitcoin has this massive advantage in portability. It's digital. You can send it across the world instantly. And while gold's role as a reserve asset is, ancient and established, Bitcoin's is just now starting to emerge, thanks in large part to these very ETFs. Of course, it's not a perfect one-to-one comparison, and we have to acknowledge the valid criticisms. Skeptics will point out that Bitcoin has no intrinsic backing, that it's still seen as way too risky and volatile for many people, and that it's still vulnerable to cyber threats. These are the real hurdles it still has to clear. And that leaves us right here with this final, provocative thought. The launch of the Spot Bitcoin ETF wasn't just about a new product. It was a catalyst. It's accelerating this massive collision between centuries of financial tradition and a completely new digital way of thinking. The record-breaking success of IBIT proves the demand is absolutely real. So the only question left is, what will this new integrated world of value actually look like in the years to come?